Steve, Andy, what's going on today?
Hey, yo. Hello. Thanks, Scott. Andy, everybody.
Hey Scott. Hey Steve. Hi
All
everybody.
right. All right. Welcome to the Tuesday edition of our afternoon webinar series. Trade of the Week is the theme. And now that you know you can see and hear, we'll just get going. Hello, some of you regulars in the questions panel. All right. Trade of the Week. Just a reminder, we're a software as a subscription company. We're not a registered investment group. We're not money managers. So please do not construe anything you see or hear today in this presentation as financial advice. If you need financial advice, it needs to be custom tailored to you, and you got to go seek out the right professionals with the right licenses to do that. So nothing today is to be construed as registered investment advice because I'm not registered. I'm just giving a couple of opinions here. Neither is Andy. All right, hang on a second. There we go. So when people join Trade Ideas, one of the first things they comment on is, wow, this is a pretty in-depth program, and we realize that it's 14 years in the making, and there's a lot of layers to it, a lot of different ways it can be used. And so we have a lot of onboarding opportunities for you guys to connect with us, just like we're doing right now. But just a reminder, this slide is very important. The trading room that Barry Anderson moderates is no longer on Webinato. It's a brand new platform, custom tailored to what he needs, which is a pretty cool deal. And everybody's really happy over there. It's been a pretty good experience for transitioning to a new live trading room. So Monday through Friday from bell to bell, and even a little bit earlier, Barry is walking a lot of people through, about 500 people actually, walking them through the market and through the day, also sharing his desktop and his knowledge of the markets, and most importantly, the Trade Ideas product, as well as a few good handful of traders that are in there as well, kind of taking the lead sometimes. So there's that. If you're not in there, you should ask yourself why, because it's a free room, and I guarantee you the content and the quality of the experience you're getting in there is comparable to anything that you might have to pay for in other areas in the fintech land. So a good place to hang out if you're not in there. We have the afternoon webinars like you're hearing right now. The trading, it's actually it's not on here, but we have Monday, Tuesday, Wednesday, and Thursday, all at 2 p.m. 2 p.m. Pacific, 5 p.m. Eastern. And every day is a little bit of a different theme. I helped out Jamie yesterday. Andy helps me out today, and we do go over the trade of the week, which if you're not on that list, it's an email list that gets mailed out to you every Monday morning before the market opens with a bit of a strategy and some triggers, if any, and the reason behind it. And then we kind of follow up on Tuesdays here with the development of how that worked out. Dan and Brad typically do the Q&A demos on Wednesday and talk about what's coming around the corner, and then Andy brings his knowledge to the 5 o'clock webinars on Thursday. And then notice down there at the bottom we have a Friday support session. Just a reminder, there's 3 hours every week on Friday that we make ourselves available to you guys. It's Eastern, 11 to 2 Eastern. We try to do it while the market's open so we can demonstrate things. If you need help with a scan or something technical related to the program, come by those hours for sure. We do not record them, so you got to come by in person and get the help. A lot of people show up and just kind of hang out and learn from other people's questions in those sessions. And then lastly, at the bottom there is this next slide, the Trade Ideas University. We got away from one-on-one. We're just getting too big. Our user base is growing too quickly. We just got away. It was no longer an efficient use of anybody's time. So now we have the group training. It's still live. You can still get live Q&A going, but we break it down into 4 sessions during the week. Monday and starts in the beginning stuff, and by the time you get to Thursday, you're learning how to do back testing and optimize some of the settings in the back testing returns that you're getting to optimize your own strategy. So we do have a recorded version of it as well. I imagine Andy might go ahead and drop in that link. It's a YouTube link for a playlist of 4 recorded of these classes. So if anybody wants to dive into that, you're welcome to. But during the week, it's nice. You can come in and pull up a chair and get live help as well. So all of those things combined, we really feel we extend a pretty good hand to try and help people get a learning curve that's manageable. It's going to take a few weeks typically to try and learn this software and how we use it and some of the benefits and the value of it. So as long as you understand that, that's a good thing. All right, so again, man and machine combined. I always like to start with this slide as a theme. And this week, I want to kind of remind people we're very close to, it may be next week, it may be the week after, but we're very close to the Brokerage Plus tool being connected to the AI Holly. And that can be very interesting. We don't really know what to expect. We're all going to find out together. We have great hopes for it, and it's going to be fun to watch. But in this segment here on this slide, I want to remind people to throttle their expectations. Dan's been talking a lot about it. Barry's been talking about it in his room. Jamie spoke a lot about it yesterday. Getting realistic expectations when it comes down to slippage, real world executions, commissions, all those fees adding up that kind of eat into the profits that we see often on the AI window. So without a doubt, it's not a tool that you can plug in, turn your back on, and start filling out deposit slips. It's to your bank. It's just not going to work like that. It's going to require some man and some machine, some human trader, some machine. And that's what we offer here at Trade Ideas is the machine. And we try to offer some support as to help the human side of it. So let's get started. The agenda for today, March 12th, similar format to what we've been doing recently. And I'll go over the market recap. I have some interesting thoughts about kind of what happened today and some additional thoughts that will kind of tie it all together later as we go into the sector glance. But Andy will look at the AI recap today for what Holly did. The trade of the week did not trigger, but we'll talk about that and some teachable moments relating to that. Sector glance has always been kind of fun to look at and see what sectors might be fun to keep an eye on tomorrow. I'll explain what this means here later. And then we'll check the alerts that we sent out last week in cloud form for the price alerts. And I've got a few, maybe, I don't know, 6 or 7 more ideas this week that we can pair out. And after that, if there's any time permitting, we'll go to opening Q&A. All right, let's see. Mike has a comment today in the chat room. Somebody was asking for a scanner that could find gap fills like NTNX. Andy's Let's Go Fishing scanner, possibly. I don't know. I'll let Andy follow up on that one for you, Mike. I don't know if there's so much of a gap component in the Let's Go Fishing as there is trend reversals with good stocks, with good fundamentals. But nonetheless, we will move forward. All right, so looks like Andy did drop in that link to the YouTube playlist, so that's a good thing. Well, thank you, Andy. Let's minimize this guy and get started here. I've got some thoughts on the market. So yesterday in Jamie's webinar, really tried to stretch this out and show people that the move from this level down here to this level up here, what we had was a 50% retracement. Did you know that, Andy? I bet you did. You're usually pretty good about that stuff.
Yeah, I'd heard it. I didn't spot it, but I did read it somewhere. So.
Well, yesterday I took out the old free charts which has a Fibonacci tool and drew it, and we confirmed it. So, this was much needed. At one point we were talking about entering a bear market with 20% correction off the top, but that's not really in play anymore as we're lurching back towards recent highs. And we joked last week about how nice it would be, to create a really nice possible cup and handle with this being the cup, and ideally. It would have been nice to maybe see a handle come down and dip into this 50-day moving average area and get a real nice symmetrical cup and handle, which is typically the kind of pattern you're going to need to come and reassault a significant level, which I'm going to highlight right here, that horizontal line. Look how many times we have touched this level. We've talked about it a lot, but after the little, we'll call it a rinse off. We laughed about last week saying that a slight pullback in one day was a monkey bath, just kind of splashing water on yourself when the market really needed a shower. Well, you got a little rinse off, we'll call it that, and it might be enough. I don't know, but this orange level, the 280 level in the SPY, is just ominous in terms of the amount of times it's been rejected. So here we are again after a shallow pullback, nice decent bounce in the averages, but we have an ominous wall with which to work right there for sure. So that's the bigger picture stuff. Declining volumes wasn't really, what I think people want to see for the most part. We'll be nice to see these bounces come back with vigor and have bigger volume, but we just didn't quite get that. Let's look around the horn a little bit. Now, recent resistance and then kind of retreated at the close back to that level for the most part. So the NASDAQ is showing leadership, definitely. IWM was not showing so much leadership. Look at the bounce back in IWM. This is what I'm going to talk about a little bit later. Andy and I had a friend that we traded with named Tom, and Tom coined the phrase, "Oh, it's just a dead cat bounce back into the pocket." And what he meant was that this sell-off was significant, and this was just the relief bounce on low volume, by the way, into and underneath a very significant area, which in this case would be, the 10 period and just below the 20 period as well. So when we look at the sectors a little bit later, we're going to see a lot of sectors that are not necessarily showing the vigor of the NASDAQ and the SPYs coming back up and hitting these highs again. They're stalling in the pocket, so to speak. So we'll look at some examples of that. I just want to kind of lay the foundation to start as we get into that. The Dow also is really hurt by Boeing, and that plane crash hasn't helped it. The Dow is bouncing into the pocket, as you guys can all see right there. Just a couple-day bounce right into and underneath the curling moving averages. So we're at kind of a crossroads in that respect. We don't know, are they going to fight these off? I mean, when we look at the NASDAQ, it looks like the NASDAQ has already fought off. NASDAQ didn't bounce into the pocket, it blew right through its pocket. Spiders kind of blew through their pocket as well. But then we have a different story in the IWM small caps and in the Dow. They did not have as much bounce. So we have a little bit of confliction going on there. All it could take tomorrow might be a couple of decent days of the NASDAQ coming in and closing significantly and kind of grinding higher. So the NASDAQ is the leader. That's our big takeaway. In the S&P 500, the bigger index that everybody watches, we really need to resolve this orange line here. 1, 2, 3, 5 touches in the last few months. So we needed that pullback. I would have liked to have seen a bit of a deeper pullback, but 3 is enough. We'll talk a little bit more about the SDS trade of the week last week. I have some thoughts on that, but we'll get to it. So that's pretty much all I see. Again, we'll look at the indexes in a little bit going forward to kind of tie it all together. But for now, that's all I see in the major markets. We got a shallow pullback, a low volume bounce up. 2 out of the 4 indexes are bouncing up into their pocket. Not as strong as the S&P, and the strongest of all being the NASDAQ. Honorable mention to Apple. We talk a lot about Apple being a proxy for the market. Apple busted out of this really long, almost month and a half, 2-month tight wedge for the tight range for the most part. So I think it's one of the reasons the Qs and the NASDAQ are doing okay and holding in there. I think Google's had a nice bounce too. That's helping drive the NASDAQ. And Facebook's trying to create a cup and handle and possibly move higher, but big takeaway, watch the NASDAQ. They're leading. But what's going to resolve with the small caps bouncing up into their pocket with a kind of a feeble attempt, not looking like the rest. And again, when we go through some of these sectors later, you're going to see a lot more of this, which does kind of raise a little bit of some question marks. You want to add anything, Mr. Andy?
No, I tell you what, I agree with everything you said. The SPYs, if you just put the SPYs back up and zoom out, that is such a not that far, just maybe about 6 months, so you can see the resistance levels. So we've hit this level now, what, 5 times trying to get through. You have to wonder. I mean, I have a feeling that if we get through it, yeah, he's going to mark them off for you there. If we get through it, it can be explosive, but you got to ask yourself, man, if we try it a 6th time, it can't get through. We've been pounding on that door, for a long time. The buyers at some point could just throw their hands up and, give up.
And then the fear of missing out comes in with the people in cash on the sidelines.
Exactly. So, yeah, we'll see what happens. Looks like we may have a date with that area again, and we'll see if we have enough resolve from the buyers to push it through that level. But so far, it's been a tough level.
Yeah, well, Waleed's with me. I think we both would have liked to have seen a bigger, longer shower, maybe a deeper
Yes,
pullback.
yeah,
But
always.
it all makes sense when you look at this perspective that Andy just pointed out there. I mean, you don't go through these levels like butter back here. I mean, it was almost a foregone conclusion we were going to back up. I mean, I was pretty confident we were going to find some sort of resistance there. It's just a matter of how far back are they going to pull the battering ram. One more thing before we move on to Holly. Andy and I discussed this today. You know, in the bigger picture things, these treasuries were in the pocket just a couple days ago, and they're fighting their way out of it. So this can be a defensive type of a allocation for bigger money managers and hedge funds. Don't discount this. You know, as stocks do better, these bonds should probably start to, you know, not do so well because money is flowing back into stocks. Two really different types of asset classes here. So typically, when things start to get a little defensive, you start to look to the gold sector and the bond sector. And so it's kind of curious that today the bonds were kind of tipping their hand a little bit. They're maybe getting a head start, trying to really break through all of this tangled technical moving average area.
Mm-hmm. Unless we get back into that, like I said, that Goldilocks I talked about on one of my market recaps, go to the Locks economy where, like I said, I'd hate to see it where interest rates head back down to zero. And then, of course, that just raises all assets. You have gold, bonds, and equities and everything going up.
Real estate.
Yep, real estate, everything. Yeah.
All right, well, that's all I got for this stuff. I thought Holly had an interesting low trade count today with a pretty good directional bias, but that's really all I'm going to comment. I'll leave the rest to you.
All right, Holly had a great day. And Steve, if I for any reason, start dragging, just take it back from me. I am on my father-in-law's Wi-Fi, and sometimes can lag. So let me.
Country internet.
Yeah, let me grab the sharing. Steal it from you. Actually, it's not letting me open. Would you mind? Can you shoot it over here, Steve? For some reason.
Yeah. Probably because you weren't tagged correctly.
Yeah, probably so. All right. Do a clean monitor here. All right. You got me?
I'm still waiting. Yeah, there we go. Might be a little bit of slight delay, but I see your screen. You're good.
For some reason, every time I'm here, when I start to screen share, when it really bogs down, you can see my latency up there and my thing pinging around between 5 and 800. But like I said, if it starts to drag, Steve, just steal it back, and I can talk about it with you showing. Sure. But guys, Holly had a really good day. Let's first of all, like I like to do, I like to look at the market that we had and. Bear with me here. I was on the wrong keyboard. All right. So here's our spiders, guy, and had a little gap up this morning. Not a whole lot of action. It looked like a pretty good day in the spiders, but overall didn't finish up. Just 0.36%. A lot of that was gapping up, and really just not a whole lot of movement today. A little bit of sideways action in the SPY. Usually makes it difficult on any strategy that you're trying to use, and I thought Holly did a great job. You can see all three segments did well today, although Holly 2.0 just only had 4 trades, and the majority of it, I'll show you in a minute, was up in 1 trade. But the big one of the day was Holly Grail, and you can see here, I always like when you have some nice green positions. And we're going to go through these trades here because every now and then I see that where Holly just gives incredible entries, and I'm going to show you an example. And what I mean by incredible entries, there's what I call no pain entries. The alert goes off, and it really doesn't ever go against her. So I'm going to show you about 5 trades today, all from Holly Grail, where there was no pain. And as well as I do, any trader out there, if you can get trades that never go against you, that's a feather in your cap, and Holly got a handful today. All right, so let's just do this. Let's talk about another thing I like is there was no stops, no stop hits today in Holly Grail. So that's always a good thing. And let's take it from, I got it sorted now by risk on. So we're going to look at the best one here. And one of the early ones in the morning, as a matter of fact, 2 of them came out at the same time, and it was WAB. NIONS. And lo and behold, you can see here, this one I take back, Steve. I think I was looking at this one and I thought the trade went off right here, but now I see this line stretching out. So this one would have given a little bit of pullback. Obviously, it didn't go to the stop, or we would have a stop hit over here for exit reason.
What time of day did that
pull back
trigger?
about. That triggered at 9:23 my time, so that would have been, yeah, that would have been right, right here in this candle, at the toward the end of it. So it obviously didn't go down to the stop. So, but it still would have pulled back about 15, 20 cents. But nice game. You look at that, went from basically almost $1 in this thing on risk off.
You know what I like most about that one is the daily chart. That's a beautiful daily chart.
Mm-hmm. Sure. This is one, as a swing trader, I would be tempted in, hanging out in this one a little bit longer, just because, so hold on, my laptop's being a little funny here. But boy, yeah, that's an explosive looking chart there. And what Steve's talking about, you had a big move and really didn't pull back that much. What you got here was sideways action, and then there's your 10-period moving average, just kind of boing, dinging it and shooting it higher. Could have another date with this 10-period moving average. That is what you call momentum on a daily chart. But look here, guys, we also had a good short, a couple of good shorts in here. So Holly was swinging both ways, a long and short, and we will take a look at CRM here. Another great example. There is your alert. Let me zoom in a little bit. There's your alert right there, and no pain. Okay, your entry was right there, and look at that stair step down pretty much all day long. I don't see any reason to get out of this chart. Now, there's always a reason to ring the bell. Yeah. Yeah.
Bouncing up and fading entry, not chasing the short side.
Exactly. Mm-hmm. So, boy, that is just a gift. And really, like I said, I don't see any reason to get out of the trade. Now, maybe ring the bell and take some profits on some, like we always say, and let the other work for you. But look at the daily over here too. It's just a mess, breaking down below all its moving average, broke at 200 today. There's a lot of good things about this short, if you're short, this stock for a short sell, like we Holly suggested today. FRPT. And I think we're going to see another one right there. There's your buy signal, and this candle right here, really no pain. You had a bounce up, came back to basically flat, and then moved higher. So another great trade, and another interesting daily setting up over here, which, if we could take out this triple high right here, maybe one you want to mark up in the for. That's a big level there if you can break through it. WAB. Here's one. Here's a great example of Holly, getting nervous and getting out for profit save, even though the trade never went against you. So this is where you have the advantage, guys. Holly is set up on time algorithms and things like that. So she, will get out of a trade sometimes if the trade doesn't materialize like she thinks it does based on the time of day and things like that. This is where you have an advantage. You enter the trade. Look at that. There's your fast line right there. I mean, never really closed below it until, the last few minutes of the day when the market kind of sold off. But a great trade, guys, where you hear me talk about where you have the advantage over Holly when it comes to exits. You never went against you here. And this is one you could have stayed in and definitely made some extra change there. Another great call right here. You have a stock that kind of sold off and went sideways after a move up this morning, and then breaks down right there. Holly gives the sell signal right before the breakdown, and pretty much for the rest of the day marched down lower. Holly Grill had a good day. Real quickly on Holly 2.0, not a lot to talk about here. There was one good trade, a really great trade here in HYRE, another no pain trade. Look at that breakout there. Look at that call right there, breaking out of this level on the daily. That is a beautiful call right there on HYRE. The other ones, you had another short and a couple of longs, and pretty much just nothing happened in these trades. Nothing really went against it that much, but You look at risk off and risk on, they just didn't do a whole lot. And real quickly on Holly Neo, and I'll hand it back to Steve. Holly Neo had some great trades. He just had a couple of them on risk on. That's why you see risk off over here finished best for Holly Neo, because a couple of the trades, here's one that she actually would risk off, made $16, but by the end of the day, it had gone down and hit the stop, So another one here, Cure, flat. See, so you can see where she lost money on these. They were actually good exits for risk off, profit saves, but they went further with the market. So this risk off can definitely work against Holly as well as work with her. So just be careful of that. But I'm not going to break down these. I'm going to hand it back to Steve. But this one right here, real quickly, was a pretty good trade. This TCDA, but for a quick pop, but really pretty sloppy there afterwards. But Steve, that's all I have, unless you have something you want to add to that.
I do, but I'm going to save it for when I
Okay.
see some alerts. There's actually one in there I really liked that I think has some meat on the bone. We'll stay tuned. So I'll take it back. Thank you for that.
Okay, you bet.
And that should be back. All right. So now we're on to this week's trade of the week. Before we do that, last week's trade of the week worked very well. We talk a lot about trying to buy more than 3 days in swing trading. It's really hard to buy more than 3 days when you get something going. So, recall this was, for the most part, this was the entry down here in the SDSs. And then we had 1, 2, and then a gap up on the 3rd day. Well, I just want to remind people that you can't expect things to go 7, 8, 9 days in a row in your favor. It's just not that easy. There's going to be a breath. There's always going to be a pullback. It's 3 steps forward, 2 steps back is how this game works. So I just want to remind people, in real time on Monday, on the 8th, last Friday, when this stock did gap up, I reminded people, you don't always want to look a gift horse in the mouth. So from Monday has given us a gift on the open here. Consider taking some profits. So that's a perfect opportunity when you've had 2 or 3 really good days of nice run, and then you come in the next day and the stock is gapped up and given you a gift. More often than not, that could be the beginning of the pullback, and that's what happened here. So I would just remind people, as a teachable moment on last week's SDSs, they worked great all week, but eventually, your number's up and the musical chairs are going to start and the music ends. So when you get a really nice gap up like we got, you got to consider taking some off the table. That's how you're going to make leaps forward in your profit and loss, not sitting back and being greedy and turning your back on it and saying, oh, I really want this thing. I need more. I know I was looking for, hopefully, a nice move up to these levels, but we didn't get it just because, like we talked about, we didn't get the big shower, the big pullback that we needed and wanted in the SPY. So again, the reason I came back to this was when something in your swing trading goes in your favor 3 days, crescendos with a gap up on the open, take some off, a third, a half, something to try and take advantage of the move that you did just sit through. All right, so it's funny, on Friday, the ETF scanner was just loaded up with gold miners and gold miner juniors and gold, etc. And then it's funny, that's not what I want to do. We go back to, that was Friday, by the way. Let's load some historical data. Let's just go back to yesterday. And what did it look like yesterday? Gold was absolutely at the bottom. Okay, so Friday it's at the top. Yesterday it's at the bottom. Go back to live hours. Hey, we're back to the top again today. So you can see how nasty and quickly these sectors will pass the baton back and forth. So going into the weekend, gold was holding up really nicely. I'm going to see if I can get just that. There we go. That's what GDXJ at least looked like going into the weekend. And there's our GDX going into the weekend, I believe. Nope, it'd be like that. So as the rest of the market was selling off and putting in, a kind of a reversal candle, remember we gapped up that morning and could have taken some SDSs off. The day finished really nicely. But here's the gold miners. All week they were flat. They never really sold off. They were digging in a really nice base. And I know we looked real quickly at this candle, I think 2 weeks ago, but reminder, and this will come in handy again when we look at AU in a second, when these reversal candles, question mark reversal, possible reversal candles, when they don't materialize and the next day we get a nice move off of them, we have to let them go immediately. There's more damage that needs to be done, and this is, in this case, the following day showed us the more damage was ready to be done. So I'm kind of setting up the stage here for AU. So going into the weekend, we had a market that was selling off but recovered on Friday, and a noticeable sector, which was the gold miners, just standing out head and shoulders above the rest on Friday going into the weekend. So looking at a few interesting names, which, by the way, gold miners are continuing to hold up here, but there's just something weird about this one. So if I can go back, perfect. This is what we looked like when we did the trade of the week content. We had a nice recovery day, and there's a really nice, hopefully bottoming candle type of wick. Not a lot of blowout to the downside, but recovered intraday nonetheless. And so the blue line is still intact. The blue line is our trigger. Basically, we want to see the following day, which would be Monday, take out the highs of these types of candles. But if they're going to lollygag around and just start trading back into the wick area, the bottom tail of this candle, then again, all bets are off, just like they were, and I showed you a second ago, in the gold miners. So fast forward, and here's Monday. Hideous. Thank God it didn't trigger. Sometimes these things can be really nasty, throw a lot of elbows and trigger in the first 10 minutes of the day, only to reverse and do what they really want to do. So I don't know. I didn't do a big news check. I'm not always big on news. If I didn't see anything major, maybe somebody can correct me if there is something major out there. But for whatever reason, the stock decided to really run the stops yesterday on some really good volume, I might add, and put in kind of a reversal wick. And then today, here we are again, kind of an inside day, no real resolution. Well, I would say that if you want to continue to play this, it's the chances of it triggering might not be as great now. It's not following what the GDX looks like, its parent sector. So this thing just might be not playable. What did I mean by a teachable moment? Well, thankfully, again, it didn't trigger. And if it did trigger in the first 15 minutes of any day, you got to be a little wary, because there's a lot of elbows being thrown, as I said. There's a lot of wide swings back and forth. That's just the nature of the opening 15-minute range of our market. But a teachable moment, and then we defined our risk and our reward, and it basically didn't trigger. So no trade is better than a bad trade in this case. But if you want to continue to look at this price, if this thing blows through tomorrow, maybe it's just going to play catch up for whatever reason. It needed to go down. Sometimes price action gets stupid. It needs to go down and tickle the obvious stop runs and get everybody out that was looking. Just draw a line right there. Everybody was probably looking at these type of support levels. And wouldn't you know it, yesterday's big volume stop hunt, I call it a stop hunt because it recovered. It's got a bottoming tail. So there could be some meat on this bone. If it does come up and trigger that blue line, you're welcome to still take it. I would have liked to have seen it trigger on yesterday, quite honestly, and do what we're seeing over in the gold miners. So it's acting weird, and anytime a stock is acting weird, I think you're better off giving it the benefit of the doubt to not trade it than find a reason to shoehorn it and make it work. So trade's open. If it does trigger this week, you're welcome to take it, but I don't really like the way the last 2 days have developed. I don't know. What are your thoughts, Andy? Anything interesting?
No, I agree with you. It's one of those calls. It's kind of like the call that I had on Fluor, a couple of weeks ago. I like the setup. The setup was there, and if it were to trigger, I think the risk reward was great. I mean, I thought the potential was great, but hey. No harm, no foul, no loss, no trade. That's one that I still have marked up if it ever does, but just didn't happen. And that's the key, guys. I think if you go back and look at this, especially end of last year, the way we make our choices is not just on what we see a trade has the potential to do, but we're also looking at the market, and we don't want to put us or yourself in a sketchy situation. So that's why we try to arrange these trades that the market doesn't go in our favor, or they won't trigger. If that makes sense.
Yeah, I even mentioned, I think, in the content, sometimes it's the second mouse that gets the cheese. So I was all prepared to talk about how we could get a nice move off of that of that and talk about, well, everybody that bought back here is waited for the herd to say it was safe. And when you do that, you're just asking for it. There was a possible setup here that didn't materialize. It broke down there. And so this was an opportunity for a second mouse gets the cheese. Everybody that chased up here would have loved to have had a second chance down here, which we were trying to take and give a safe entry, an entry that had a base to it. Well, it appears the shenanigans probably weren't quite done. So yesterday and today, a bit more of the stop running. We'll see where it goes from there, but it's up to you if you guys want to trade it if it triggers above the blue line there on my chart. All right. There was a question, how can you check what triggered GTT in Holly? Well, if I go to GTT, it's called a tailwind. So Mike, who asked that question, Mike, if you go to the website, trade-ideas.com, and go to the bottom footer, under FAQ links, you'll see one called AI strategy descriptions. And in the thumbnail, to give you a basic thumbnail of what Tailwind was looking for. I believe it's looking for some sort of continuation from yesterday. So there's a nice green candle yesterday, some continuation that just didn't materialize. Market got heavy again at the close as well. So I would invite you, Mike, to go read up on those strategy descriptions, and it might help you orient as to what it was looking for. It's not specific, but we just give enough information so you kind of get the gist of it. All right, so moving forward, we'll do, okay, let's take, let's do the sector glance thing here. And I think I'm even going to set a couple. So let's go back and, like we did last week, reverse that order. Let's go look at the price alerts. And last week, if you sort by P&L, look at that. I mean, we had some triggers. These were all the ones that triggered on the 5th. Hang on one second. That is pretty interesting, but I'm going to take that one out. I'm going to pull these out because we did have two that did not trigger. So this is what it looked like last week when we gave them out. The semis never triggered, and that one never triggered, although it's coming back for more. Keep an eye on PDCE. You could keep that one active and working. But going back to the ones that were working, let's see. This was a push through. It looks like a day and a half on that one. Roku has been squeezing higher back and forth, but still creating some value and above the green line. There's our GDX, really nice move, pushing higher. And let's see, I would keep that one probably on the board as well. This one triggered just today, it looks like. It triggered today and it's kind of retreated a little bit. This one triggered and has been consolidating. So there's no loser on here per se. There's a little bit of alpha, a little bit of meat on the bone, some better than others that got ahead of themselves and have pulled back. But that's what we gave out last week. We're going to clear this out now, delete those, and we're going to start from scratch. So I wanted to go over the last week's first because there's a couple of ETFs in here that might be interesting. All right, so what looks good for tomorrow? Because remember, these ETFs, they might not last long before they reverse and pass the baton to somebody else. Well, again, I'm going to come back to it. GDX strong today, but still strong in the bigger picture here. Trying to break through out of its pocket and break this little minor down. Can't even call that a downtrend, but break this little down slope here and push back through its moving averages. GDX is showing some strength. Not bad. That was the junior miners, and there's the big guy miners. Okay, there's the oil service. Let's count how many stocks are bouncing into their pocket. This is one of them. So here's an example of, again, I'm going to predicate this by spiders bouncing through their moving averages, and even more so the NASDAQ bouncing way through the moving averages and now fighting the major resistance levels. But is that really the story about what's happening in a sector by sector look? Back to the OIH is the oil service. Looks like a dead cat bounce into the pocket to me on low volume. FXI, that's China. Nothing really to worry about there. Technology is going to look just like the Qs. Oh, look at that biotech. Can't get through the threads of the tangled web there. Kind of a dead cat bounce into the pocket. Silver, it's kind of a mess. Nothing to glean from that. XLV healthcare could make an argument. It's bouncing into its pocket. Treasuries, we talked about this earlier. This could be a bigger play on the defensive side of money managers shifting their allocation models to a different asset class. Keep an eye on the treasuries. If the treasuries continue to push higher, I'm pretty sure it's going to have some headwinds on stocks. Natural gas, forget that. XLE, energy, looks like it's bouncing up into the pocket to me. And when I say that, bouncing up into the pocket, it's not necessarily a bad thing. It's just a caution flag. It's like, okay, now there's some more work that really needs to be done, because from here, this is where you can really get some big collapses. You know, they first broke down, they bounced up to the underneath of everything. They can't get through the underneath of all this mess. The path of least resistance quickly becomes down. So that's what I'm concerned about. I'm not calling it. I'm just watching out for it. Let's look at some more sectors. The gold ETFs moving through. The Qs, we looked at that. The semis bouncing through its pocket. You know, it's fighting through. This is what the other sectors need to start doing here, what the semis are doing. The brokers, weak attempt, bouncing into the 50 moving average, not even up here to the other pocket where the others are. Oh, interesting. IYR. Keep an eye on IYR. It's breaking out. Maybe it's the quest for dividend return, Andy. I don't know. But these are going to be your REITs and your commercial real estate. That's a very interesting looking chart. Very positive.
They've been fooling people all year.
I mean, we have
They weren't expecting that. Yeah.
We have a long compressed channel that we're breaking out of. The longer and the more compressed and the tighter the channel, the more energy you can have coming out. This is very notable, the IYR. Steel bouncing into the pocket rather sloppily. Spiders, we've looked at that all day. Oil, the commodity, is fighting. Here's where it starts to get really ugly. A lot of pocket bouncers here. Financials bouncing right into the pocket. What the bulls do not want to see is a failure and then a release to the downside. Not what the bulls want to see. Retail bouncing into the pocket. Solars bouncing into the pocket. Agriculture, home builders fighting it. IWM, we've looked at that, bouncing into the pocket, and then we get some really ugly banks. They can't even get to the pocket. Regional and national banks are really, really soft bounce, and I think that's very notable. Extremely soft bounce in the banks here, while the S&P and the NASDAQ are trying to say, come on, guys, we're breaking through, follow us. And these banks are saying, no, we're trying to catch our breath down here. We can't even bounce up into the underneath area, the underbelly. Dow bouncing up into the pocket, into the underbelly. So I think you get the picture here. There's really not much I like other than the gold miners. As a matter of fact, we're going to use gold miner juniors as one of our sets. So I love the way it took 2 days and fought through. Today it's peeking its head out. We're just going to put 3274 right at the top here, and this will be our first of the day. So this is the gold miners, and it's an ETF. Could be a defensive play. We'll see. But there's our first one. All right. That was the only one. Actually, there's another one. Let me spitball and throw something out there at you guys. So you've seen me draw that arrow on a few of these sectors bouncing into the pocket, and what happens if they release? It's not going to be pretty. What happens if that happens? Well, there's no reason why we can't reload the old SDSs for another possible play. The whole idea, though, is where would we put them? I think we would put them, I would put them, I don't know.
That's a tough one, yeah.
That is a tough one. But I'm going to do it anyway, because if we do release, it's not going to be simple. It's going to be pretty, I'm going to do it like right here, 3480. 3480. This is if the market does reverse. It's a second chance to participate on the downside. And again, I'm only doing this when I look at all these charts bouncing up into the pocket. If they fail and roll over, the whole market's going to be doing the same thing, I'm pretty sure. So 2 ETFs, one's an inverse, one's the gold miners, that I think are worth watching. You don't have to swing trade these. You know, if they trigger, you can day trade them. But I think we learned from the SDSs on the trade of the week last week, it's hard to get something to follow through in more than 3 days around here. It's 3 steps forward, 2 steps back. So just always keep that in mind. So I've got one from the comp rating. I like 2 of them actually from the comp rating, I believe. Let me see here. Yeah. I'm going to go ahead and put W. W Wayfair has got a large short component. lot of short sellers in here. Great composite score. The short sellers are missing something here, and they're being punished. So any continuation above today's high would be interesting. 172.80. All right, and then a second one is a bit farther down on this one. I believe it is Tandem. Is Tandem still on there? Yep, there it is. Up there a little bit. Kind of what Andy was showing earlier on one of those Holly trades. All right, gap up, move higher, came back, couldn't even fill the gap before our friendly guiding hand of momentum caught the price action, just like that other chart. See these hundreds of times a week in different names, pushed the price higher. Now, there could be a little slop in here, but still, the point is this thing has a short float of looks like 15%. Pretty good composite score. People are missing the boat on this. Earnings were 9 days behind us, so this is an earnings play. Couldn't fill the gap. If this thing wants some more momentum, we'll use this high back here. 66, I'm sorry, 70, 66. So we'll create price alert, 70, 66. So that was the other one from the comp rating. I've got one that we haven't seen much of lately. I've really tried to clean out a lot of the filters. I had over what's the word we're looking for? Over filtered. What's the word we use, Andy? For oversampling.
I know what you were.
It's infectious when you have a mind fart.
I know, it really is.
Curve fitting. I think I've got too far into curve fitting on the old washout bounce, so kind of cleaned out a lot of the filters, and it's giving me more returns. And this was kind of an interesting little push down and bounce up. So we're gonna do what we talked about. Use the high of today on that little washout tail there, and make this one of our settings. 44.20 is going to be our number. All right, 44.20. We'll call this washout bouncer. And how many is that? 1, 2, 3, 4, 5. I've got that one and that one. I only have 6 today. So the last one was the one I teased earlier. I got from Holly, and guess what? It's not a long, it's a short. Remember this chart? You talked about this one?
Oh, yeah.
Turn this chart upside down, guys, and it's just like the ones we were talking about. Tandem. See how that moving average is coming down, gap down, and it's rolling over to highs. Well, same thing. Turn the stock upside down, same thing. Big push down, sideways action. Oh God, here comes the moving average momentum line. The price is being thwarted even before the dang line even gets there. So let's look at these critical levels. The trade idea stop low is right there on this candle. So we'll call it a low of 32. Well, we're going to short in the hole. Even though that's not always the most desired, but with this particular setup, I think shorting in the hole is okay because it's like an inverse of that chart that we saw to the upside.
And it won't be a long move to the hole, you know. Well, that's another thing. Yeah.
31.99. Okay, I lost my train of thought. 31.99. And watch what we have to do here. We have to code this. Okay, I already know it's going to be a short. I'll just remind people, found this one from Holly.
Maybe zoom out when you're done with that.
Yeah.
Let's see. I want to see what it looks like on the daily.
Ugly.
Oh yeah. I just rank it.
There's no support.
Ugly.
There's these lines down here at 31.
Yeah, but it's not.
Keep it nimble. If it works, yeah. It might work for a half a day. It could always reverse. But again, if you turn these charts upside down, we've been talking about these all year, you know, to the upside, looking for things. You know, again, it's kind of similar to this, where did it go? Tandem. Upside, it's just the exact same to the downside. We'll see if it works. All right, so with that said, let me highlight. We might have time to look at a couple charts before I bring Scott back in. So if somebody wants us to look at some, we have a few minutes. I'm going to share 6 alerts, copy the code, and drop those into chat window. 6 alerts to share. And you can copy and receive, open that cloud link. It'll add those price alerts to your individual price alert page. directly for you. All right. Waleed likes the price alerts. Good to know. Yeah, I mean, that's what I want to try and do is, help people orient their eyes and imprint on the setups that are good, not the ones that are junky. Do you also have the list for last week? Mike, I just deleted it. You could always go back to the replay tonight that Scott will load up at some point, and you could look at the replay and go back over them because we walked through them real quickly there before I deleted them.
Or go back and watch last week's.
That's true. We'll go back and watch these. That one's already up there. Christopher wants to look at KEG. Okay, so immediately I see a giant base, and it jumps out of this base with volume to confirm. Didn't even get close to its momentum average. Pushed up, went sideways, got close to its momentum average, and had a push up today. I think you said you're long at 325. Pretty good. And here's what I would expect. You've heard me talk a lot, Christopher, about that day and a half. I think you might be set up here for a day and a half push. Today you got your move. Look at this. Perfect example in the past 2 days, actually. Big move, squirted higher. Guarantee that this sell-off happened before lunchtime. So if you get some follow-through tomorrow, get your hand on the button and get ready to take some profits on a possible day and a half move. It even happened back here, well, actually 2 days. But typically we can get a big move and then some follow-through. You could have some follow-through tomorrow, but get ready to start taking some profits. Maybe you keep some for the bigger picture if you know a story that I don't know. This thing has been horribly beaten up. Maybe it's got a lot more on it. Maybe, if you're patient, you can get this thing back up to $7.50 or $8. But in the meantime, it's always nice to take advantage of a really nice profit and time the jump rope and take some profits.
Mm-hmm.
All right. One more for Carlos. NDRA. NDRA. Same thing for you, Carlos. You might have a day and a half. Today was your big move. Obviously, it came out of nowhere. Big move of volume. I'm assuming you'd be long now. It'd be much easier than trying to chase tomorrow. But tomorrow, if there's some follow through and it takes out this, which level was I looking at? This candle close level right here, 265. If it takes out 265 tomorrow, you might have a quick shot up to 3. But a day and a half momentum can quickly turn on you. So if you get any follow through, use that to give them what they want while you got it, because it's easier to sell when you can versus when you have to. All right, so I think that clears up the questions. Good questions today, and everybody, good attendance. Thank you so much. Let's bring in Scott to bring some notes of interest before we shut her down.
Hey, thank you. All right. On the way out, just a reminder that you can subscribe for the I'll put the slides up. Subscribe for the Trade Ideas podcast. We release them weekly. Just search for Trade Ideas podcast wherever you listen to podcasts. And there's an ebook. We're still not seeing the slides unless it's not updating for me. Okay, there you go. And there's an ebook that both Steve and Andy contributed chapters to. You can get it at trade-ideas.com/ebook. It has 5 chapters, each one with a strategy about how to win in a post-BTFD market. And there is a product code that's good today and the rest of the month. March of Ideas. It's all caps, just like you'll see it on your screen momentarily. And you can use that for 15% off your first month or year of Trade Ideas. And those of you that are standard subscribers can also use that to do an upgrade. So write that down. Remember, it's all caps. We'll also send it out in that email you'll get later on tonight or tomorrow. Any questions, email info@trade-ideas.com. That goes into our help desk software and gets routed to the appropriate team member here to answer your question as quickly as possible. You can follow Steve at TodayTrader on Twitter. We also have @TradeIdeas, and Facebook.com/TradeIdeasPro is the Facebook page to like and share with your friends. Thank you, Steve and Andy, and everyone that attended. Have a good one.
All right, thanks. See you next time.